Hello, my name is Eric Walczykowski, CEO of Bespoke Partners and host of Tailored Talent. Today, I'm joined by my good friend, Mike Hoffman, and CEO of SBI. Mike, welcome to the show.
Hey, Eric. Good to be here.
Well, I'm really looking forward to talking to you today about the importance of a go-to-market talent strategy and its impact on a company's ability to exit. And I think you would agree in today's market where private equity firms are looking for exits, considering that exit real time is really important.
Yeah, and we're seeing that quite a bit right now. I think everybody I talk to is, hey, I think we're going to try to do an exit in the next 12 to 18 months.
Right. So, and a number of our large clients have actually identified portfolio companies that are going to exit within reason, but regardless of valuation at today's market, because they've got to get that portfolio company bloat dealt with so that they can move on to some new investments. I noticed recently you did a survey and found the following statistic. While 87% of CEOs agree that having the right people with key go-to-market skills is crucial to their success, only 46% think they have it right. Talk to me about the gap and what does it mean for go-to-market talent?
Yeah, it's a good question. And I had a conversation. I did a keynote in London last week for the CEOs of a very, very, very large PE firm. And we talked about this specifically. So we went down from, hey, greatest growth strategy in the world tied to the greatest go-to-market operating model that you could ever have. If you wrap it around bad talent, you will not get the juice from the squeeze that you're expecting. And when we indexed on this one, there will be a gap. If I ask the CEO, hey, how do you feel about the talent within your product organization, or within your finance organization, or within any organization in the company, there are going to be questions at the CEO level. Like we did the research to make sure that, but not as big a gap as there is in this one. So CEOs feel like our go-to-market talent is massively important to our growth success and our value creation success. And then if you just read into it, about half of the CEOs will say, I'm not really comfortable that we have the right go-to-market team on the ground. Ramifications for that are they feel like it's a bit of a black box. So I think my CRO is telling me that we have the right people on the ground, but I'm not sure. So again, there's a gap in all areas of the company at the CEO.
I think it's really important because when you think about it, right, if we think about value creation within private equity and software companies, which is what we solely deal with at Bespoke Partners, that go-to-market value creation strategy is almost on everybody's plan, right? It's about growth. And so the importance of that role is so important, yet CEOs, to your recent study, would suggest that most of them don't think they have the right talent. What's behind that?
Now, the ones that are most confident, so when I do the comparison, the people who are the most confident in the go-to-market talent that they have on the ground are the people who have the highest level of confidence in their CRO and their CMO.
Yep.
So when you look, so again, this group that I was with last week, they all had really high confidence in their CRO. And so their responses to the survey where, the growth 1000 is that gap of 87 versus 46% having confidence in it. They had a much tighter, there was a much closer, the gap wasn't as big.
Yep.
And the fundamental reason is because they felt like they had the right CRO in place.
100%. And so when you think about it, and that really gets down to the work that we do, scorecarding that CRO role, the CMO role is so important because if you have faith and confidence, both of us are CEOs, if we have faith and confidence in our key leaders, that's going to flow down throughout the organization. As usual, you and I go a little bit off script, but let's talk a little bit about board composition and how that relates as well. We did a recent study that would suggest that of private equity portfolio companies, only 27% have operators on the board. So let's pull that thread a bit further. How do you feel about go-to-market being a primary value creation lever and aligning board composition or experience around that on the board of directors and its influence?
Yeah, well, as you mentioned, right now it's growth is the biggest driver of equity value that there is, and everybody's playing for growth. You in private equity, you can make money without growth, but you probably have to be buying assets at 6 times EBITDA, and you can make a lot of mistakes and not grow it, still make money. But from a standpoint of having a person on the board that, one, understands it, two, can help the management team and and specifically the go-to-market team, whether that's the CMO or the CRO, think about or think differently about how they get the outcomes that they're looking for, and then bridge that gap and be an advocate on the board for the investors, which, in a lot of cases, the PE boards are made up specifically of people from the PE firm and the investors, I think is really, really helpful. So, I've got on my board, I have 2 of those. I have 2 operational people primarily that are focused on and understand growth. And they're super helpful for both my chief commercial officer, my head of marketing, for me. And again, they can bridge that gap between the board and the investors and the management team.
Well, and I find that just so helpful. And we share a common board member in Matt Scherers. And while I have significant go-to-market experience, you have significant go-to-market experience. For me, it's so helpful for my chief commercial officer to actually be able to just spitball with Matt and kick around strategies. It adds to our ability to surround the problem with different ideas that we're trying to solve. So I appreciate your point.
I forgot about Matt, and the fact I actually wasn't even referring to Matt when I was thinking about our board. Yeah, Matt is a commercial savant, and I think is probably super helpful for both of us. So I'm not sure anybody will have someone to that commercial level on their board, but you and I are fortunate enough to have.
Well, we're helping sell the stock of Matt Scherers going up around this particular strategy.
There's only one Matt Scherers,
right? So going back a bit, we talked about the importance of the top, the CRO, the CMO. Talk to me about getting the role design right in an organization and how it impacts exit.
The specifics of the role design, that all kind of starts at the very beginning of what I'll say, what do most companies get wrong with growth? There are 5, but I'll stick to the first one, which is alignment. And that's not just alignment between the private equity firm or the investors and the management team. It's even alignment within the management team. Like, when you think, what role does growth play in value creation, it can be multiple ones. So we have a thing called the value creation compass, and I won't go into the detail of that, but I'll give some examples of how this could be different. Is it growth at any cost, right? So ARR will set us free. And that's different than saying, hey, we actually don't want to increase OpEx, but we still want to maintain the growth rate that we're at. Those are 2 different things, and then there are categorically different levers you're going to pull, right? If you say we're willing to invest for growth, categorically only 2 things you can do: it's market expansion and it's new product introduction. Right. If it is the other one, then it's about go-to-market optimization, it's about pricing, it is about retention. So when you pick your CMO or your CRO, you need to make sure that they are aligned around those key things, because certain CROs are going to be really good at, if you give me all the OpEx in the world and you ask me to go attack a market and expand a market, they'll be great at that. You ask me to take a new product to market with a sales team, great at that. They might not be so good at how do we do retention and how do we do pricing and packaging optimization so that we get the best juice from the squeeze and best CLTV. So I think that's part of the key of picking that right person, is understanding what is the role of growth in driving value creation.
I mean, you said it very eloquently around really understanding which lever within the go-to-market lever or growth expansion aspect you're talking about and aligning, which is why we spend a ton of time scorecarding and really understanding what the thesis of value creation is. And then oftentimes partner with you all to do that, as you are experts in the multiple levers of value creation as it relates to growth.
Well, Eric, I'm reflecting on a conversation you and I had last year. I think it was early 2023, where we looked at the market right now, and there were some surprises on CROs that were being moved out. But the needle moved. So there were a lot of CROs, and especially in tech-backed companies, that were really good at, it's ARR at any cost.
Yep.
And as soon as the private equity firms started cranking it down and saying, wait a minute, there's a different rule of 40 that we're after. We're kind of not after 39% growth and 1% EBITDA. We would kind of be better at a 20-20 split between those two to get to a rule of 40. And there were CROs that would actually get on the phone with me, look me, through their camera and say, Mike, they're saying EBITDA now. I don't know where to start. And so companies had to make a change because there wasn't alignment between the CRO and their understanding of how growth drove equity value and what the investors were thinking, because now they're saying, hey, can we pull back the growth rate and increase the amount of EBITDA? So and that's a different type of CRO.
Absolutely. And I think we would both agree heading into 2023, that was a key theme. And I think that's carrying forward into 2024 as we think about uncertain markets. So talk to me about whether I am that capital efficient CRO, or wow, I'm stuck and I don't have plays in the playbook there, but I pick up the phone and I call Hoff and I'm like, Hoff, it's time to phone a friend. Help me out here. What is SBI doing to come alongside those CROs to make sure that capital efficient growth is executed upon?
Well, okay. So you're asking me that question, but here's what I'll tell you is I probably call one of our partners or senior partners who have forgotten more about this than I will know. But it really does start with, alignment. It starts with, hey, what is is there clarity with you, with your board, with the CEO, with the CFO, and everybody else on the management team on what's the role of growth and value creation? So we'll kind of start there, and then we will look at prioritization of which levers you have to pull. Now, and this is where it gets complicated. And our team is great at this, and we're great at it because we've done it 1,000 times, so we can see around corners. Is now once you pick those levers that you're going to pull, now you got to go, what's the operating model and what are the key pieces of the operating model? Everything from, sales coverage model to segmentation to ABM to what are those things we need to do? There are 54 of them on our solution framework. If you just try to do that on your own as a CRO or as a CMO, if you pick 5 at random of those 54, it's like playing the lottery. You got a 1 in 12 million chance of getting them right. I think that's where we help you figure out what are the key things that you do that are going to move the needle in the short term to drive the growth outcomes that you need. So that's
absolutely. And to pull the thread even further, as we talk about, strategy and tactics that lead into that, there's 2 elements that I think you and I would both agree on. Well, we got to measure it now. So what are the key KPIs that folks are looking at and evaluating go-to-market teams today? And then, of course, does compensation support those KPIs? What do you think? What insight can you provide to the audience about that?
Okay, the compensation on the KPIs, and it's interesting. Just had this conversation yesterday with the CFO of a publicly traded software company, and he had to explain bookings to us, and they don't report bookings to their investors or to Wall Street. Bookings is only a thing that they've made up for the sales organization and the sales team to drive that behavior, because years ago they did this conversion from perpetual to SaaS, not in the technology sense, but in the commercial sense, and so they're still holding on to this whole concept of bookings, and they report ARR, net new ARR on a constant currency basis. And I said, well, how come your team isn't driven on that? Well, this is an evolution from the past. So I guess the reality is, and I said this out loud to him, I said, comp plans do not solve business problems. They certainly change behavior, but they do not solve business problems. So everybody in the organization, their compensation should be based on the KPIs that you're driving toward. So if your KPI is ARR and net ARR increase, then you got to get rid of this concept of booking, because you'll have a sales organization that could actually book, in terms of how booking is defined, a bunch of new business, and they could make gobs of money and shrink the ARR year over year. Literally, that could happen. So I think that's the important of the KPIs. And the other thing is, get the KPIs as tight as you can. We have so many RevTech systems now that people have access to, and they're like, ooh, I can get so much data, and they have 75 KPIs that they're measuring. Which are the ones that actually matter? And get your team rallied around those and compensate them for those.
No, absolutely. And I think, look, to kind of sum up today, as we think about it, whether you're on the cusp of an exit in the next 12 months, or you're just getting started on your value creation plan, you've got to have what levers you're pulling within that value creation plan lined up. You got to build the tactics behind that. You've got to develop the KPIs that you're going to manage that tightly line up with that. And then you've got to develop comp plans that incentivize that behavior. As that's put together, what it really comes down to is you got to have the right team at the top, because that's going to drive the outcomes we all want.
Yes. Let me give a quick story on the team, and starting with the team. So once you have all those things in place, right growth strategy, right go-to-market operating model, I will tell a story about one of the portfolio companies of this PE firm I visited last week. The CEO is running a company that went from 50 million to 500 million in revenue in 5 years. Half of that was organic, half of it was inorganic through acquisition. And I said, what was your secret to driving that growth? He said, when we were a $50 million company and we had the strategy laid out, the first thing I did was I way overpaid for a CRO. Like I recruited a CRO that could grow to $1 billion company. And so I leaned in hard. And he said that made all the difference in the world. So now I don't worry about, do I have the right talent in place? Do I have the right go-to-market strategy? Is the right operating model there? So that's for what it's worth, is if you're on that growth trajectory and you're drawing a line that says we're going to triple, quadruple, in their case, 10x over a 5-year period, then pick the right team.
Very well said. You're not hiring for where you're at today, but it's where you want to go.
Exactly.
Well, Hoff, as always, appreciate the partnership, appreciate the time together. Thanks for joining us on Tailored Talent, and hope to have you back soon.
Yeah, for sure. Great to see you. I'm going to have you on our podcast as well, Eric. I got to bring you back.
Look forward to it.
All right.
Anytime.